Listen to what Trump's senior trade advisor had to say about the markets. Roll it.
Sure. The first rule, particularly for the smaller investors out there, you can't lose money unless you sell. And right now, the smart strategy is not to panic, just stay in, because we are going to have the biggest boom in the stock market we've ever seen under the Trump policies. We will find a bottom in this market quickly. We will hit 50,000 on the Dow easily by the end of this term.
All right. Kevin O'Leary joining me now. Right. 50,000 on the Dow by the end of Trump's term. Almost double, actually more than double from where we are now. What do you say to 50,000 by the end of 4 years, Kevin?
I think that's a long time to speculate what the outcome's going to be. I think you've got to take it quarter by quarter. Let's just deal with hysteria right now about the market declines. Let's assume we close down another 1,000 points today. I kind of, I understand why there's a lot of teeth gnashing, and I get it. But I'm a kind of a long-term guy when I look at PE ratios. So we took the market down from sort of 22 PE to now around 17.5 as of this hour, which historically is not a bad place to enter if you want to think about long-term sustaining returns. So I'm looking at it, and I've started to nibble. I'm not going to catch the bottom, but 17 PE sounds pretty good to me on the S&P 500. And I look at the pillar, you got to look at the E too. Everybody's saying it's the end of the free world as we know it. I don't really view it that way. I make an assumption that we're in a pretty strong economy right now. Those job numbers on Friday were very, very good. I have not seen a decline in orders from my own tear sheets and private companies I'm invested in. They are not yet ready to call recession. And now we go to the question of, okay, what happens regarding all these tariffs? And I would like to see, as many others would, one of these 60 countries or 50 countries that are calling in to cut a deal. You got two pieces to this negotiation. One is remove all tariffs. I'm 100% for that. Like, I don't care. Pick your Vietnam, Israel, India, Euro, Canadians, whatever you want. Everybody's willing to cut a deal to zero tariff both ways as part of a package. It's the trade deficit punitive aspect here. Taiwan's a good example. There's a $200 billion trade deficit because we buy stuff from them that we don't make. I have a greeting card company there with a lot of Hewlett-Packard laser cutters, and we put it in Vietnam because we didn't want to put it in China. And Americans are going to pay a lot more for their greeting cards. Love Pop greeting cards are made in Vietnam, and they're shipped every day from there, and it's all American equipment invested there. Our money, American money invested there. So we're going to have to work that out, and the government there wants to work it out. A lot of moving parts here, Stuart, but I believe in economics driving everything at the end of the day. And I don't think the Trump administration is stupid. They know they've got to start negotiating deals and show the world what the outcome of this is going to be.
Okay, then we've got America's top banker, Jamie Dimon. He says Trump's tariffs will lead to a rise in inflation and slow the economy. That would not be good for stocks if he's right.
Yes, if these tariffs stay in place in perpetuity at 25% rate, he would be right. But I think this is a giant negotiation. And, Trump is not shy of being bombastic. We've learned that over 12 years. And you may find the rhetoric painful, but that's not the key. The key is the signal. And if all of a sudden all these countries want to go to zero tariffs, and then we have to work out case by case what commodities we want to let into the country. We need aluminum right now, so we need the Canadians' power to make it. So that's crazy to tariff ourselves on aluminums if you're in the U.S. And I'll tell you one that I find so intriguing that you would understand, Stuart. I was in Geneva last week for the global trade show for manual watchmaking. It's a $5 billion business between Switzerland and U.S. While I was there with all the CEOs, all the watch companies, because I'm trying to buy watches, you know that, and I want piece uniques, so I'm dealing with these guys directly, we get whacked with a 34% tariff directly. Now, here's the dilemma. If you're a watchmaker, pick Rolex, pick Patek, AP, the demand for your watches worldwide far exceeds your ability to manufacture them. Some of these companies only make 4,000 watches a year. So you're going to delay shipping them to the U.S. while we work this out because China will buy them all from you, or Asia, or Singapore. And that's their dilemma. And I say to them, listen, guys, you want to keep on side with American consumers with your brands. I'm one of them. And just let things play out a little bit here. Give us a few weeks to work this out. There's a case study right there. Don't take my watches away from me. That would be crazy. And I speak on behalf of millions of collectors.
Okay, I hear you. It's a giant negotiation which is not going to be concluded anytime in the immediate future. Kevin O'Leary, thanks for joining us, Kevin. Good insight today. Thanks very much.